Here's a quick snapshot of some key earnings that were handed in post the market hours today, and the stocks of which could be reacting to the same come tomorrow. Starting with Bharti Airtel, an important one that the street was closely waiting for. You have the revenues bang in line with our expectations, 23,938.7 crores, exactly as we had expected. Margins were better. We at ET now were expecting 43.7%. They delivered 44.4%. There's a loss, which actually it's a very big loss if you look at it on a standalone basis, 15,191 crores versus our poll of 798 crores. But why that is because the company has taken a one-off expense. They've made incremental provision of 10,744 crores on account of the AGR. So largely it's a good set, I would say. AGR provisions have been totally done with now. So they've reported a decent set of numbers. Margin performance has been very good. And apart from that, even the ARPUs are quite strong. They're up. They've come in at 157 versus 129 in Q1 of FY20. So on a YOY basis, a healthy expansion seen there. 4G data customers are up by 43 million through the year, a growth of 45.3% YOY to reach 138.3 million in the quarter gone by. There was strong mobile data traffic growth of close to 73% YOY. It's been a highest ever data usage per sub at 16.3 GBs per month. Of course, this was on the expected line given that there's such high spike in the usage of data, especially if you look at how the quarter gone by has played out. Moving on to IndiGo, lockdown clearly has taken a big toll on its numbers. Revenues were down 89%. They reported an EBITDA loss of 1421 crores. The bottom line performance was weak as well as expected. A loss has come in at 2,844 crores. Load factor has come in at 61.3% versus 88.9%. Leasebacks is something that's likely to help the cash flows. Capital raising plan update is also something that the management has given. They've said they've raised around 35% of the total of 3 to 4,000 crore rupees that they plan to raise via different steps. They've also said that they hope fare caps are removed quickly for the entire aviation space to sort of start picking up. First 20 days of July, according to IndiGo, the demand was very strong, but the second wave of lockdown definitely impacted the demand. They're currently in discussion with OEMs in terms of lease costs and prices. Demand in terms of travel from corporates continues to be very, very subdued. Fixed cash burn will reduce as operations resume and the number of flights increase. So let's see what will be the reaction and how well the street will be able to digest this commentary and the scenario that's panning out in front of the aviation space. InterGlobe Aviation definitely in focus. TVS Motors, well, weak set of numbers again as expected. The entire Motown has really taken it on the chin for a significant part of the quarter gone by. There were no production, no sales, and that's something that TVS Motors management also reiterated in their press release. Revenue came in at 1431 crores. There was a loss. It was higher than expected, 139.1 crore. We were expecting close to 90 crores. EBITDA loss in line with estimates, 48.8 crores versus EBITDA of 355.8 crores. But the management commentary, I would say, was mixed. They're cautiously optimistic for the second half. But yes, rural outlook was very positive and very upbeat. They're seeing good demand coming in from smaller markets. Urban, they said once things open up, they do believe there's enough appetite, there's enough pent-up demand for personal mobility for it to augur well for a company like TVS Motors once things start to normalize in cities as well. Moving on to another earnings candidate, Chambal Fertilizers, fantastic set of numbers delivered. Revenue has come in the excess of 3,200 crores. Profits was significantly up to 98.4 crores versus 165 crores in the same quarter last year. Margins, fantastic expansion from 15.6% in the June quarter of last year. This time around, they've managed to log in 18.3%. So clearly a big beneficiary of the rural uptake, of strong monsoon, of strong expectation of the harvest season as well. So Chambal Fertilizers likely to react well, hopefully in trade. Finally, you have GMM Pfaudler. Operating revenue was flattish, came in at close to 155 crores. Profits were up 9% at 19.2 crores. Margins saw a slight compression from 18.4% in the same quarter last year. It's come down to 17.8%. Management said all the business lines continue to witness strong traction on back of robust demand driven by chemical as well as the pharma space. Acquisitions will further help the company strengthen presence in the various regions. They've received approval for acquisition of DDPSI's glass-lined equipment manufacturing facility, which is situated out of Hyderabad. So let's see how that pans out for the company. But these are some top results that you need to watch out for as far as tomorrow's session goes.